All right, all right. So welcome back to the second episode of our Smart Money podcast series. And we're very very fortunate to have Obaid Masih come back to us. We started, if you saw episode 1 of our Smart Money podcast series, we got into a really interesting conversation about forex investing, the difference between forex investing and forex trading. We were talking about the difference between technical analysis, fundamental analysis, but most importantly, we started really getting deep into why is it that most EAs out there seem to fail typically within that first month, within a week to a month for the most part. And I kind of wanted to come back to that because that's huge. A lot of people rely on these EAs, and you hear the term thrown around, artificial intelligence, and all these technical jargon sort of buzzwords to go around, and as we were talking about before, a lot of times they're not really AI, they're not really artificial intelligence, and so I want to get a little bit into why is it that most of these EAs out there fail. Can you talk a little bit about that, please, before we actually go back into some of this amazing strategies and trading and investing philosophy that you typically go by?
Sure, George. And great question, man. I know you dived a little bit in last week, and that was such an insightful question. And I'll tell you why it's a great question. It's a question only asked by people who have been there and done that. It is not a novice question. And if you're someone who has never done Forex or never done stock trading or anything like that, you wouldn't even know that this problem exists. And the reason I'm very happy to answer that question is because I feel like our consulting, like the expert advising consulting, we have put a lot of blood, sweat, and money, and capital, and energy to resolve that problem. We have resolved that problem. So let me tell you why they fail. Most expert advisors are built on technicals. They're built on technicals, and technicals are only built on two things mathematically. Either is trend following or mean revision. There are only two ways to make a technical indicator. All technical indicators have to eventually fall in one of the two categories. When they categorize it that way, you're making an assumption. For example, you take your expert advisor and you put on Euro USD. Unconsciously, you're making an assumption that there will always be an imbalance here in this trading pair, and I will always find an opportunity to work out a trade in this pair. That is not true. Maybe this week the opportunity was in Euro USD, but maybe 3 weeks after, that opportunity is gone. The imbalance has evaporated and the market will just move into its a normal noise because nothing really is happening. And that noise is unpredictable. And any EA will fail there. So where's the opportunity? Suppose then 3 weeks after, the opportunity is not in Euro USD, but GBP Audi, the Great British Pound and Australian dollar. And now your EA doesn't know that. Your EA has no idea that, oh, I don't need to be put on this pair. I need to be put on the other pair. So what we have done over here at our expert advising consulting, we have resolved that problem. We have went to the very root of that problem. And what we do, we go like, okay, fine. We're not even gonna put a EA. We're not even gonna put any technical indicator or any mathematical regression or neural network to predict the forecast until we know that there is opportunity there. And that is how we protect ourselves from failing. And all the other EAs, they will fail eventually, because suppose you pick like, you know what, I'm picking my EA and I'm gonna pick my EA that's gonna like only work on pairs where there's movement happening. Guess what? So many times those movements are designed to trap you. Something we will get into that. And that happens in Forex, that happens in stocks, that happens in equities, even happens in a lot of other markets at some level, real estate also. And we will get into that, like why those opportunities are specifically put there to trap you. But if you have your fundamentals right, you know you're matching the exact strong with the weak pair, you're matching them on the right reasons, then you protect yourself against that. And then because you're just not an EA. You're like, we are so much more than an EA. We are a whole investment strategy, the whole fast strategy, fundamental, sentiment, technical. And that is how we protect us against those ever changing fundamentals. And another reason most EA fails because of fundamentals change. For example, like a new government comes in Australia and they completely change the metrics to which they are perceiving their dollar. And now the whole fundamentals have changed. So what you assumed maybe last year or 2 years ago, this doesn't apply that anymore. So you do need the new definition of the fundamental, and you do need the new metric, the new success metric that country has put in place, a new benchmark that they have put in place, that this is how we have to achieve to create ourselves to that economy, or achieve that success metric in economy. And that is why you need to partner up, or if you're like a serious investor, if you're like a trader, I mean, good luck, go ahead, try that 20 EMA and stochastic and let me know how that works out.
Yeah.
If you're like a serious investor and you really value your money and you like you want to build serious
Consistent growth, consistent, predictable growth.
Yeah.
Yeah, yeah.
Something that just works like 4 weeks out of 52 weeks in a year. You want consistent growth and you really value your money, then you need to partner up with people who have resolved those issues, who knows those issues. So once again, man, thank you so much for asking that question, because novice won't ask that question.
Yeah, yeah.
Only someone will ask that question who knows it, that this is what you run into.
Yeah, and that's something that, of course, having been involved in this field for a very long time, ourselves here at AI Growth Markets, and working with with you guys now at Expert Advisor Consultants. It's one of those things where EAs that you see out there that are just licensed, and people will pay $10,000 for something that's only going to work for a couple months, and then lose all their money on top of it. So not only are they losing what they paid for it, because it becomes obsolete, right? It just becomes obsolete, completely outdated in a matter of weeks, maybe months at the most. But then now at that point, they start to actually lose their investment capital, which is a double hit, and so it's something that we see a lot, and it's something that we've been working on for many years, for a very long time here, at AI Growth Markets, and partnering up with expert advisor consultants and investor. Then is, how can we fix that problem? How can we solve that? And in our last episode, you mentioned something very important, which is that that human component to it. Whereas this is how the technology is constantly being optimized and monitored to make sure that it adjusts to these changing fundamental, which are basically the environmental changes in those different markets. And so that's something that we take very, very, very seriously. Now,
absolutely,
there's something that I want to go back to, because you mentioned as far as sort of like the trap that people fall into the market. Now, is this what's normally referred to, like some people may know it as like market manipulation or something like that, as far as the market makers try to basically bait you into thinking the market's going a certain direction, and then when enough people go in that direction, they reverse it on you, and basically it's like they take a net and start just scooping fish out of the water. Can you explain a little more about that, the market manipulation? I mean, is that a real thing? Does that really happen?
That's a real thing, and the reason for that happening is the interest rates within the country. So let me pick an example here to give you that, and all of you, like right now, the time of the recording, December 2023, you can go ahead and pull up your charts. Pull up the chart of Euro Mexican or Swiss Mexican or USD Mexican. So let's say Euro Mexican. Right now, the Euro Mexican, I think the Euro interest rate is around like 4.0 something, and Mexican is around like 11.25 something. So the differentiate between that is like 6 or 7%. Now, what happens that right now, if you take a sell on that, the broker or the market has to pay you money daily, every time 5 p.m. Eastern time, when the money goes to the next day, they have to pay you that money. That's your carry rollover. So you're actually getting money from the market, something we use in our strategy, something we use at Forex Capital.
And that's just from basically the overnight rate. That's not
Yeah,
even exiting the trade or anything.
yeah,
That's
yeah,
that.
yeah,
So
yeah,
that's almost like a bonus if you're entering
yeah.
the right if you're on
Like
the
a
right side of
super
that equation.
dividend. Yeah, like you can think of it really like as a supercharged daily dividend that you're getting paid by the market
Which
if
is
you're
what the
the
banks do, right? That's pretty
yes,
much what the banks do.
exactly. And that's where the manipulation comes in. So what happens sometimes in order if the trade is going sell, so your Mexican, the big money, the smart money will go sell. But now the market has to pay these huge dividends to the smart money who are in the right direction. So what they will do like a quick spike on the buy, and they know this that most of these expert EAs and the trend following people, their trend is usually like if it goes if the MACD goes to positive, we'll start trading buy. If the price goes above 20 EMA, 200 EMA, we'll start taking buy. And the market knows that too. And that's exactly what they do. They're like, okay, we'll make the MACD positive. We'll make the price go above 20 EMA. We'll do all of this. We'll give you all the flags you need so that you're gonna come in and buy Euro Mexican. Now, when they buy Euro Mexican and they have reeled everybody in, enough volume has been created. That's when the market goes back and it goes so fast in the direction of the original carry because that is the market has to pay as a super dividend to the people who are in the right direction. And that is the market manipulation. It usually happens in these high interest pairs. Another high interest pair would be USD yen. USD yen is another pair you see a lot of this.
Now I have a question: is how does that relate to, for example, these traders that are always relying on the support and resistance? I mean, how does that correlate with that? Like that strategy where maybe the markets are being manipulated, and meanwhile you have a technical trader looking for these support and resistance triggers. I mean, how does that correlate with that?
So the market people know that too, right? So suppose you're in Euro Mexican, right? And they know that there's a resistance. And they're like, okay, fine, let's take the price above this resistance so we can get all the people in who are following that support and resistance, and they'll take that money in. So whatever indicators you have, whatever thing you have on the chart, whether it's a 20 EMA, support and resistance, trend lines, like they know that too. They see those too. They actually see it better than all of us, and they know that too, and they'll reel all the money in, and because they reel that money in because the dumb money has to pay the smart money. And the smart money is always with the dividends. If you want to know like what's the favorite thing for the super wealthy, dividends and daily carry interest rates. That's their favorite. That's their bread and butter. And guess what? You are the butter. You're one they eat if you're in the wrong direction of it.
Yeah, that's amazing. So how can someone, let's say for example, that wants to avoid that, like let's say by they come to expert advisor consultants, AI growth markets. How what would be the difference? How can they avoid that if they come to, like, let's say someone like us?
Yeah, first of all, always partner yourself with something like people who have been doing this for a while, like an intelligent hedge fund or somebody who's like knows this thing deeply, like expert advisor consulting. And what we'll do over here, we will make sure we are only in the direction of the interest rate that makes sense. Because just like Euro Mexican, right? It will be really hard for the banks to keep that thing in buy direction. They might keep it for a week, maybe for 10 days or 14 days, but they cannot survive that. And that is where they reel in those people. So we know that game too. We know that game too, and that is precisely why we follow the fundamentals, we follow the sentiment, we follow the direction of the interest rate, and we only cherry pick our investment trades or investment runs. I like to call them, because we let it run for a while, and on top of that, like not only being with us will protect your money, but you while you're making that money, you're gonna get that daily dividend out of that interest rate differential every day. So every day your account increases a little bit, even though your trade hasn't closed yet or you haven't exited yet. But it just keeps on growing. And most of the Forex accounts are leveraged. So guess what? You only put, like, suppose you only put $100 and the interest rate differential is $5. But that $100 gets multiplied by, let's say, 50. Or to keep math simple, let's say 100. Suppose you're taking leverage of 100, right? So that's $100 becomes 10,000. So you're not getting 5% of your $100. You're getting 5% of that $10,000, which will be equal to $500.
Yeah. Wow.
So if you think about it, not only being with someone like a real, I call the real hedge funds or real like experts who actually follow the fast. Not only you have protected your capital, but you have supercharged, and whatever your wealth or investment goals are, you're gonna reach there a lot faster if you have someone like an expert advisor consulting in your corner.
Yeah, I mean that's huge. It's like, why would you, roll the dice and try to do it on your own? I mean, you might have a better chance just going to Las Vegas and maybe going to a roulette table or something. Because
literally, that's what I tell people. Like someone the other day asked me, like, "Hey, do you think I should get into Forex trading?" And I'm like, on your own with that laptop and setup with no cloud and no machine learning, please go to an expensive vacation in Vegas, and at least you'll enjoy it. And the view is a lot better. So
yeah, there you go. That's for sure. Now, it's I honestly, there's you taught me something here, with the dividends and everything like that. Now my question is this: that's still considered an unrealized gain, right? You still have to exit the trade successfully in order to keep that money. Otherwise, it's gone with the rest of it. Is that correct?
No, the dividend you keep. Every 5 p.m. Eastern time, the dividend rolls in, and that's yours to keep. They cannot take it away from you.
Okay, so then wow. So that's almost a way to almost hedge against your position within your position to try to either maximize or at least prevent some losses. So that's
and not only that, like if we are taking that trade, our fundamentals are right, our sentiment is right, our interest rate differential direction is right. Most of the time, those trades then go in like for the big wins. And on top of that, you're gonna get like huge. I love weekends. I love keep it opening on weekends, because on weekends you actually get dividend for one extra day. And if it's like a Labor Day weekend or big weekend, you actually get dividend of 2 to 3 extra days. So now they have to pay you more.
So you're getting dividends on Saturday and Sundays.
Yeah.
Also, it's not just only weekdays, Monday through Friday. It's actually basically 7 days a week.
Yeah.
Okay.
So while on the weekend, on Saturday and Sunday, you're like chilling, your money is working very hard for you. Yeah. And on top of that, it's a leveraged account. So you're not just getting like dividend on your capital, you're getting dividend on your capital multiplied by 100 or 50, whatever the leverage you're using, or 10. So that's actually a very good way to do Forex investment. So like you're like getting money like in multiple ways.
That's amazing. And I mean, it's like we got so caught up. I mean, so much information here. I know we're doing a 4-part series. One of the things that I wanted to talk to you about, which we'll leave for the next episode as a cliffhanger here, is I want to talk into what makes a strong currency versus a weak currency, and how we could start to put all these different theories and philosophies into play. I mean, if you want to touch on that real briefly, we have maybe a minute or two, but then we'll get into more detail in our next episode.
Sure. I mean, it's a topic that can literally have like a whole class, a whole semester on this thing. But basically, there are 10 major currencies that we follow, and pretty much each currency, some of the things that they have decided, they're like common between them, like GDP. That's common between all of the currencies, and interest rate, that is common. But then each currency has like certain thing that is decided by them. For example, like Australian dollar, the gold trade is very important. But that is not so much important for the euro, right? So the euro currency, that's not that important. So not only is this not like one shoe fits all and one code goes all. No, you still need that guidance, that principle, and those seasoned Forex investor guiding that fundamental analysis as well.
Wow. Okay. Well, so I could definitely see by this that we're going to devote pretty much an entire episode to really
Yeah.
distinguishing what makes a strong currency versus a weak one, and how that all plays into the whole trading strategy, investment strategy as a whole. So thank you again, Abad, for your time, for you know dropping so much knowledge with us. I mean, I definitely learned something today that I had no clue about, and so we're very very excited that you decided to join us, and that you're going to be joining us on the next episode. So
Yes.
for all of you that want to continue and learn some more, stay tuned for the next episode. And if you want to talk to Abide or some of the other experts at Expert Advisor Consultants, then definitely check us out on aigrowthmarkets.com, and just reach out to us on the link below, and we'll be happy to talk to you. So we'll see you
Thank you
next
so
time.
much. Have a great one.
All right. Thank you. Take care.
Bye.
Bye bye.